Market expert Prakash Diwan is joining in now to tell us how to approach the day's trade. Prakash, hi, good morning and thanks for joining in. I wanted your thoughts on HDFC Bank. There's an analyst day later today and there's also inflows of almost $400 million that we're expecting because of the FTSE rejig. And now there's this chatter on whether it's a good time to buy HDFC Bank given the kind of fall we've seen. What's your, which side of the fence are you on?
Good morning, Sonia. So I think, the sheer weightage of the bank in various indices and people's portfolio is the reason why there's so much of chatter around it. And post the numbers last quarter, what's happened is people have started realizing the kind of true challenges that the bank is facing, particularly on the high CD ratios. While there's no RBI diktat as of now to bring that to certain levels, when you look at the peer group, they are more comfortably placed at 78 to 85, the CD ratios on the credit deposit. But HDFC Bank, thanks to, we know why it has happened, so let's not get into that. But what it can do to solve is, of course, look at least inching up deposit rates, going a bit more aggressive on that. The branch expansion, wherever it is happening, needs to kind of, start kicking in. So there's lots of time that will go into putting things right? So that's the reason why the market is not in a hurry to jump at it, even at sub 1400 zones where it touched last week. So my sense is this analyst meet will probably do a lot to set expectations the way the last meet did to upset expectations. There will probably be reset expectations. There could be some respite, but I don't see any solutions that would be there that from this, from this analyst day or whatever that would kind of assuage all the misgivings around that, all the doubts around that. So there'll be some time, but I'm of the belief that at this level, if you have the patience and holding power to wait for at least 12 months, it's a great buy. I mean, so it's not that you need to be in a hurry to buy it at today's levels, but between 1400 and about 1500 is where you would probably get the stock, lock it into your portfolio for significant gains in the future. They'll come back, bounce back, the numbers will fall in place, but you'll have to be patient with the turnaround.
All right. Hi, Prakash. Good to see you in. The point on the ownership of HDFC Bank, almost everyone had gone, top up over there, and most of the fund managers are hugging the index, replicating it and buying a lot of HDFC Bank. The one that's underowned really is the SBI, but that's already had a big run. Post that big run, what's the pick between the two?
Good morning, Nigel. So it's a difficult choice, but I would believe SBI still has momentum in its favor. HDFC Bank probably has consolidation-led value, buying opportunities in its favor. Right. But I would definitely look at SBI for the tactical short term, given the fact that it still has momentum. It's actually started playing catch up much later. For all these years, it didn't do much. It kept on consolidating, which HDFC will probably do now in terms of, moving towards the 2000 mark in the next year and a half, 2 years. But I think SBI still has momentum in its favor. So depending on your horizon and risk profile, you could do that. But of course, PSU banks are still offering a lot of opportunities. So if you look beyond these two and not get into this major fight of private versus PSU and just look at bottom up, I think there are some wonderful opportunities that still exist within that, especially the largest PSU banks.
All right. Prakash, hi, good morning. The other one is Paytm. So two important pieces of news flow, 15-day extension, Axis Bank is on board. What do you make of it and what to do with the stock?
So, good morning, Prashant. So, I think it's a reprieve more than anything else. This was bound to happen. And remember, the whole change, this thing, stance that the RBI is taking is to make sure that customers are not put to inconvenience. There's no systemic disruption because of one big, large player just kind of getting out of this system. So, it's more to ease out the exit, but the exit is imminent from the banking part of the business, that is for sure. Axis coming into the rescue is a very aseptic, neutral kind of a thing. There's nothing in terms of a coalition that would kind of revive the banking business of Paytm. It's just convenience. For that, you needed a big bank with a network and the ability to do it. So that's where they've stepped in. What should investors do? I think if there's any revival in the stock price, it gives you a far better exit than looking at the screen and just hoping that someday things will look up, somebody will come and buy this out. And, there are lots of stuff that's going around in the market. But I think you need to exit, book your losses. Most of them would be booking losses here, but minimize your losses, but at least use that precious capital to use somewhere else.
Prakash, the one thing we noticed is there was a huge surge in auto stocks on Friday. Almost all of these stocks are at record highs, right? M&M, Bajaj, TVS, and large delivery buying as well in these names. Do you think there's more upside? And if yes, what would your pick of the pack be?
So interestingly, Sonia, all the auto stocks have very different tailwinds supporting them. I mean, you look at Bajaj, it's clearly the comeback of the export segment. You look at M&M, it's of course the anticipation around the EV launches and the UV business growing. TVS has its electric vehicle, success that's kind of very clearly seen as more long lasting. So I think to answer your question, most auto stocks from a demand perspective seem to be reflecting a bottoming out. In fact, there could be only improvement in demand going forward. And that means that the two-wheelers will probably benefit much more. So you look at a Hero, which hasn't moved much, whereas it has the demand salience to ramp up numbers very quickly. So I would believe there is definitely upside left for most of the players, whether it's four-wheelers or two-wheelers. But it's going to be demand-led. And it's just that the triggers are individual, but the sustenance would probably be more generic and more secular in nature going forward.
Okay, all right. Prakash, Minda Corp, that was a stock that wasn't doing anything much. Uno Minda was the one that was running away. We are at CNBC TV 18. We got the management of Minda Corp, I think, in a very rare interview in December 2022. And they were sounding very optimistic about business. If I remember correctly, the stock was in that vicinity of around 200 odd. It's done very well because in 2 years, it's doubled from there. What's your view? We have a large trade that's taken place out there, and Nimesh informs us there's a clutch of big institutions that have got in. Your view?
No, I think you spotted one of the best auto ads plays that's available. Just because they don't interact much very intensely with the street, they typically kind of there are a lot of assumptions that are built around that, and they've always beaten those expectations and assumptions that are built. The beauty about Minda Corp's business profile or the product mix, Nigel, is that they will continue to grow in each of, they are actually like the Motherson Sumi of yesteryears in terms of the kind of growth that's possible in each of the verticals, each of the geographies. So I think it's a fantastically poised business, and I'm more bullish on auto ancillaries now than the auto OEMs, because auto OEMs will probably start plateauing at some point in time if demand doesn't kind of sustain too well. But the auto ancillaries are getting global. They are getting into very solution-oriented, business models. They're not just focused on products and cost-plus kind of, strategies. So Minda Corp, of course, stands out. There are lots of auto ancillaries which have started suddenly perking up. But definitely, I'm quite positive on that. And as a matter of disclosure, we've had this in our portfolios since almost the last 18 months now.
No, got that. Prakash, let's just talk about some momentum names now. Insurance on Friday was looking very strong. So you had names like GIC, RE, New India. Maybe there is that PSU flavor as well there, right? Stocks ended 10-15% higher once again. Actually, other life insurers, SBI Life did very well. Now, talking about insurance, I don't know if you saw that news on PB Fintech, where their license has been sort of upgraded. So just your thoughts on what you like in this space.
Yeah, so I'm glad you mentioned PB Fintech, because if all the insurance plays are looking promising, which is typically on the back of expectations of growth going forward, the people who are in the intermediation business are bound to do well, right? So when mutual funds did well, CAMS did well. When stockbroking did well, CDSL did well. So it's just as simple as that. PB Fintech as a platform, and now that the RDA is kind of blessed it with the renewal of the license, means that they'll be able to invest capital and grow the business. I wouldn't be surprised if it's the season of redemption for all these new age, new tech companies, whether it's delivery, whether it's Zomato, whether it's PB Fintech, which actually overpriced themselves at the IPO time, got a reality check done, price equilibrium's been maintained, but now things could probably look up. They have immense capabilities. If they were to scale up, they could actually disrupt the market in a significant way in terms of growth rates. So I'm quite positive on that. I would believe if you had to play the insurance basket, the insurance sector, either you take a basket approach or you play the PB Fintech route, which would probably be very promising.
Okay, all right. Prakash, you heard that conversation we had with Skipper. And I recall maybe 6-7 years ago, we had discussed the stock as well. It did well then, but then it failed, to live up at that point of time. Now it appears they have got the industry tailwind as well. and they appear to
Yeah.
have a plan in place. Though the stock has doubled, I think, in the last 8 months or so. What's your view at current reckoning?
So you're absolutely right, and I must comment that the way you can recall so many details when you say around these discussions. Nigel, what's happened is the industry is completely transformed from a huge working capital, beleaguered kind of a setup to a very prompt, fast-moving, high asset turns kind of a business, and that's visible across the board in most of the place. Of course, Skipper has a huge advantage of scale that it promises. But at the current valuations, if you really ask me, and of course, I heard them talking about the kind of growth going forward. So on a price to earning growth basis, they might still come within a reasonable band. But I still find the balance sheet will find it extremely difficult to grow at that pace which they're talking about. And any capital infusion, any dilution will again be a little bit of a slowdown. So I think it's poised for growth. But the good part of that expectation is priced in the last 12, 18 months. Going forward, it could probably outperform some of the mid caps, but I think at 3,300 crores market cap, it remains vulnerable if things don't look up as compared to the larger players that are in the business. And remember one thing, they have too many things with them. Something or the other might not fire, and then that's where things could look at. They have this pipes business, they have the telecom towers business, and of course they have this transmission business. So it depends on what works when, but it's not something which means that all three would do well together.
Okay, Prakash, a quick comment on Quess Corp and what the investors should do here.
So I think this would work well for them. It's a very decent franchise, has very deep relationships. All of this would mean that they'll be able to do much more in terms of client mining, in terms of being able to derive value from each of these verticals separately. But you know what? This is something which was on the cards for a while. It's taken much longer than what we thought, given the ownership changes and all of that. In the same genre, I just want to leave you with this thought, and we can discuss this some other time, Sonia. There's a company which came with an IPO sometime back last year, I guess, but hasn't done well, and that's called Updater Services. Very similar business, but extremely promising verticals as well. Isn't valued, I think, as richly because of the fact that it is yet to deliver numbers that people expect to see. But if you compare the likes in terms of TeamLease, Quess Corp, some similar genre of companies, I think Updater Services could probably be fairly promising. So I'm positive on Quess Corp. What should investors do? They'll probably have to ride this change and benefit out of that and see where it kind of finally emerges or brings out the value.
Okay.
But not to exit too soon is the recommendation.
Okay, all right. Prakash, and stay tuned for talking with the promoter entity. We have an interview with Thomas Cook that's scheduled later today. I've done an interview with them at around 2 p.m. So make sure you catch that one as well. Thanks, Prakash, for joining in.